Okay, everyone, welcome to the BlackBull Markets podcast. We're delighted to be joined by Mr. Azri and Mr. Fatli of the MARQING'S group, and they are the top traders on our provider platform for traders to come in and copy trade. And they've done fantastically well, consistently well over the last year. The track record has been running for over 200% return on that annual basis, 111% in the last 6 months. So pretty consistent and pretty phenomenal performance for strategy. Hence why we've been so keen to get them on the show and speak to them a bit more about their trading strategy and also what they're looking for in terms of future growth and what you should be aware of if you're looking to copy this strategy too. So I guess I'll hand it over to you guys. Just want to give a brief introduction as to who you are and your background.
Hi, we are MARQING'S. So my name is Fatli.
My name is Azri.
And together we are representing MARQING'S, in which we are doing a copy trade. We are doing a EA expert advisor. We develop our own expert advisor, in which we did a copy trade, and investors are starting to come in unknowingly. So this is, I would say, a blessing. And to even be part of this show, we are truly grateful.
Yeah, actually, for our part, the thing is, we did not expect the growth to be good because in MARQING'S, actually, we provide education signal. And as of last year, I think BlackBull Markets actually, some funds that we get from BlackBull Markets were able to hold an event. So what we realized is that while we are teaching, sometimes the clients that came in, they are busy. So if they are busy, we provide signals for them. But when we realize again, not only that when we teach them, it's hard for them to grasp the understanding, then we provide signal, it's going to be hard. So with the introduction of copy trade, actually what we can do is to be transparent to them. So if we are going to teach you this framework, then we are going to give you this signal, we are going to enter together with you. But with copy trade, I think the platform is good, especially for other signal providers out there. You can use this to actually amplify your growth, because it's going to make it more credible for you, because the clients are going to see all the trades that you put in, and you can be very transparent. And if there's growth on your side, there will be growth on their side. So we are lucky to be part of this show, and we hope that we can share our strategy, because everyone should win together.
Exactly, fantastic. That's the whole idea of this. You've touched on a really important point in terms of people copying the strategy. Number one, they can see the open trade, so they can get a true feel of your trading style, your strategy, and the second most important part is they can adjust their risk, right? So that's one thing that we really focus on for subscribers or investors into new strategies, that if they're not so comfortable going the full whack, they can start at a lower multiple, like a 0.5% or even 0.1%, just to get a feel of things and then start scaling up. And then the even ones that are even more confident can go up to 2 or 3%. So those are
one of the one of the reason why we actually started doing this copy trade was actually we want to debunk the whole myth that some people say this is a scam. One thing, when they first want to start an investment or do a forex industry, they will think that this is a scam. And also they have a lot of signal providers that we feel that if you're really good, why not you let your followers copy your trades, so everyone can all win and grow together. So that's the reason why when we first started this, our mission is for everyone to grow together, so everyone also can have a feel of what the trade is like. They can know what strategy we use, and they know that we don't just teach, we practice what we preach.
Yeah, and I think the most important part is more about when they are opening with a $1,000 account, we're actually showing them that how the growth is supposed to be like. Because when they join us, what's going to happen is that they're going to say, why is there no trade last week? Because we are entering NZD cap. So as long as the price don't enter our zone, we don't make an entry. So when we explain to them, then they start to understand, because what they have perceived is that if they put in 100, what they want is a $1,000 profit within 1 month. So we told them that is not possible. However, with consistent setup that we find for them, the growth is to be, every week maybe one or two positions is going to be about 1 to 3% growth per quarter or per month. So we hope that we can share this more afterwards.
Fantastic. Just to briefly touch on the minimum requirements, what are the minimum requirements that you're looking for from investors to come into your strategy in terms of deposit amount?
For the minimum, we've already put at 1,000 USD capital. So this is to ensure there's enough room to breathe, and let's say there's a negative floating. So by doing this, because again we are trading at least 1,000 USD account, so anyone who follows us, they will have some room to breathe. Because if let's say we have a 1% example for $1,000 account, $10 loss is equivalent to 1%. However, on a $500 account, $10 loss is 2%. Hence, the reason why we advise everyone to start with 1,000 USD, so that a $10 loss won't be that have an impact. So they won't really feel that loss. So actually, it allows them to have some room to breathe.
Actually, one of the reason why we suggested 1,000 is because at the initial stage when we introduced BlackBull Markets, most of them are actually from different brokers, and they ask for a micro account. However, what we realize is that sometimes we have to shift the thing a bit, because for $100 you want a micro account. Why not you put actually $1,000, so that amount is actually a micro amount. So this will actually mean that for $1,000, having a drawdown of 10% for us, a total drawdown of 10%, that will mean $100. However, if they put $100, $100 loss would mean 100% gone. So again, there's a reason why 0.1 for every entry that we make. That will give us room, because sometimes when we play a higher time frame, the zone is going to be very big. So for it to go down and have some drawdown, they need to be able to, able to survive this demand zone. So $1,000 will be just nice.
And what is the, in terms of your drawdown, what is your maximum drawdown tolerance for the strategy?
Okay, so we actually replicate exactly what FTMO have already provided, which is 5% daily drawdown and 10% maximum drawdown. So in an event that these were to breach, we will cease the whole thing.
Yes, so that will give them, so this will give a decision for them to have whether they want to proceed or not. But again, the maximum drawdown actually is depending on us, because when we understand that $50 is the max for that day, that would mean that whenever we find a setup, we will ensure that the supply or demand zone does not exceed at least 50 pips if we were to use 0.01. So this is our job actually, to find all these zones that's less risky for them.
That's pretty amazing. And your strategy is completely automated, is that correct? Or do you have some sort of manual input into it?
Technically it's fully automated.
Fantastic.
Yeah, it is fully automated. Actually, we've been trading this for the past years. We are actually using a harmonic 5-0 pattern. So when we materialize this into the algorithm robot, so now technically all we have to do is just monitor the trades on a daily basis lah.
Fantastic.
But our trades, we actually can choose. If you want to do manual, we can, but we have to sit down on the screen and just monitor the charts. However, but right now with the help of an EA, it helps to smoothen the process and it will be easier for us to run our daily operations.
Also for our part, when we are monitoring the trades, we do this on a daily basis, because from week to week we have to ensure that we are able to get all the best trades. And this would mean that at the initial phase, I think we started this EA last September. So what's happening is that we realized that when we use a lower time frame, we can get more trades. However, when investors starts to come in, actually the way we trade have to change, because we have one investor that's put in 10k. So we feel that is our goal, to ensure that he is happy. So if we were to put 10k, our goal is to make sure it grows at least 1% a month. So for it to be a low risk, and we have all these set up, the EA that we monitor every day, at the end of every month, we are going to make a decision. Are we going to make it in a higher time frame or lower time frame. Hence why at the initial stage the growth is actually 20%, 10% and above. But as we get more investors, we have to adjust that, because the conflicting of interest now is not to be, we have to be number one, because with our investors in mind, we have to make sure that their funds are well safeguarded. So we are going to adjust at least for every month about 2 to 3% growth. That will be ideal for the whole investors.
Fantastic. It's very refreshing to hear that. So thank you for sharing. You mentioned one last thing before I get into your backgrounds. Just in terms of the performance fee on the strategy, how does your team structure that within our ecosystem?
Okay, for this, what we did is a 50-50 profit split. Why we do this, I think some people would say why it's going to be very high, because for us, when we go to BlackBull, there's actually a few ways where you can, make money. And one of the way I think most would be usually is actually the introducing broker. However, when we use introducing broker, we realize one thing: for every lot is $6. For us, maybe we get a $2. So after calculating our cost, we realize that $2 is going to be very hard for us. The thing is, we can open the trades, we can do the seminar and all. However, when we want to cover this office operation and all, we need to cover this overhead, and this would mean that 50% that we open the trade for them actually is enough for us. As long as we get at least moving forward, if we get 1,000 pips of setup every month, we would be able to cover our overheads and our salary and all, because I think there's no way we can say that it's okay to work for free, because as long as we are doing this is a business. So how we find the setup, this at the time that we invest in there. So maybe over time, when there's more investors, we are able to reduce the profit sharing. So it's actually based on how many people that can come in.
Is that 50%? Sorry, so on what interval is that? Is that a daily, a weekly, monthly? How often?
Per trade.
Per trade. Fantastic. That's amazing.
Yeah.
Great.
Yeah, and actually, I think some misconception that can be is like, why do you don't want to put it at 20%? I think we can do that. So technically, there's no reason. But I think sometimes we have to understand that we can shift the things around. There's a lot of flexibility in here. So yes, we can do, example, we say you put $1,000 in there, you're going to give us a 10% profit sharing. We can do that. So if you were to do that, at the end of the day, your account still grow 1 to 5% per month. So technically, if it is our job to still ensure that your account still grows 3 to 5% per quarter. So the thing is, you pay us that 50%, so we can ask for 10% or 1%. However, if your account can't grow because we can't stay, we don't have an office, we can't focus on our job, there's still going to be not a good outcome. But however, with 50%, our job still remains the same, to ensure that your account grows 3 to 5% per quarter. Yeah, that doesn't change.
Sounds good. And I guess, sorry, Fadli, did you want to add something to that before I cut you off?
Okay, because now I understand that this whole podcast, there's 4 components to it, which is the strategy, background in trading, as well as ambitions for the future, and risk management. So before, if let's say we have time later, we actually can go through a live trade so that our viewers can actually see how the trades are being run, and we are being completely transparent.
Yes,
that would be fantastic.
So we actually have a live trade. We have a live trade running right now, and we can actually explain the reason why we entry.
Yes.
Yeah, are you able to share your screen? That would be great to check it out.
Yes. Okay, we're going to share our screen first. Okay, are you able to see this?
Yes, we can see it. Perfect.
Yeah. So this is our trade right now. So we are using a harmonic pattern 5-0. As you can see, for us, when we discuss a trade come in, for us this is perfect. Because for us, when we see this trade, what we realize is we want a sniper entry, an entry that is as low as possible. And as you can see here right now, it's actually at the week. So technically, we get as low as possible within this month of June. So with how this play out, actually harmonic pattern 5-0, there's 3 components to it. Fadli is going to explain all the 3, but I'm just going to touch on this part. So there's a reason why at that point of time last week, some of them told us why there's no entry. Yeah, so for us, if it takes a few days for it to go down, we won't enter that trade. That's how I think a trade is supposed to be run. So technically, when it touch here, there's technically the risk is kind of very low. So if let's say we say $50 drawdown for that day, I doubt, our zone lasts until here. So technically, from here to here, until I think the loss won't exceed even $5. So that gives room for it to breathe. So assuming it goes down further, we are going to take an entry. So we can enter 0.1 here, but that leave you, I think, about 50 pips. But if you enter 0.01, as it goes down, you can still manage your risk, because for $1,000 capital, you have up to 0.1. So at $50, we cut it. So as of now, you see how it goes down. It's very nice. I think the entry, this is the demand zone. This is where at 88.6, actually most of people who use Fibonacci 5.0, they are going to anticipate a trade that's at least 50%. They're going to take an entry. But for us, we take a second retracement at 88.6. So as it touches the wick, I think it's going up. So we forecast this is going to be at least about $20, $30 trade. This is going to be a swing trade. As of now, you can see it's trending at about almost $3.30 pips. Yeah. So maybe for now, maybe Fadli can go through with us how we get this Fibonacci 5.0 pattern.
Okay. So for now, we have to identify the harmonic 5.0 pattern. There are three components, which is the first leg, the second leg, and the third leg. So for the first leg, you have to identify. Similarly, if what leg means is basically like left shoulder, head, and the right shoulder. So for the first one, we have to ensure that the first leg, in which this the head and shoulder, okay, the zero have to be at the first leg. Then we pull over here.
This is the AB.
Yeah. This is the AB. So for the AB, we have to ensure that price is between 113, at least 113 to 161.8, in which we have seen over here, 0 over here, 100 here, and price actually have exceeded up to 161.8. It is between at least 113. So as of now, the first criteria has been fulfilled, which is 113 to 161.8. Next, we have to ensure that the second leg over here and over here, we have to ensure that price have to exceed between 161.8 and 224. So we can see over here that price have exceeded 161.8, which is this level over here. So once this have been fulfilled, we can move on to the third step, in which the retracement. So the first two is just a confirmation whether price have reached a certain level. So for now, this is where we get our entry. We are going to pull over here. 0 will be at the top. This will be the last leg, and this will be the bottom. So we always enter between 61.8 to 88.6. 61.8 is our first entry. Then for our second entry will be 88.6, and we can see that this 88.6 just nice coincide with our second confluence, which is the demand zone, or supply and demand. So that's where we got our entry, and just like it create just a short tap, then it continue running up.
Fantastic.
But from here, what we are trying, so technically when we have this entry here, the thing is our stop loss is going to be very minimal. So this would mean that we expect price at least to hit 23.6 if we were to look here back, then up to 0. However, we feel that price might actually respect the higher time frame. So if we were to take this horizontal line, we put it here, some of the teachings that have been ongoing is that when your support is being broken, it's considered a fresh support, but this support is going to turn resistance. So we expect price actually, if you were to go max, it can go up till here, the safest, before it makes a decision whether it's still going to go up or is it going to go down. Because when we trade forex, there's no way we can say, oh, market is going to go up, market is going to go down. No, even at this point, one of the reasons why we enter here is because there's a bull candle, that's have been formed here at H4. H4 means it's quite strong for that movement. So when price retraces back, this way we can actually make our entry. So we expect price. So if for those who wants a low risk with their CopyTrade account, they have the luxury to close their trade at 20 or 30 pips. However, for us, what we can do now, to make this a risk-free trade. So now our entry is at 80837. So for a risk-free trade, we can put it at maybe 80847. So if we were to adjust this, it can go 80847. So once we place it as such, this would mean that we can just go off, we can just sleep, whatever we want to do, because in an event that it hit below, technically we're not making any loss because we have a few set up in a month. So this is already a risk-free. I mean, we are doing it live. This is a risk-free trade.
Yeah.
So if it runs up, it runs up. If it's not, then I think it's okay. But some, when we enter this position, using this copy trade system, actually they can also input another entry, 0.01. So if we have two running, so if with the first one hit 20 or 30 pips, you can close it, and this one just let it run because it can be a swing trade. Maybe we expect about a week or two, but if it fails, it doesn't matter because for this whole month we have growth at least about 50% from our initial capital.
Fantastic.
And I think the most important thing for us is that we start this account actually in September. So we put in actually 500 USD. We can safely say that 500 USD have been withdrawn all. So whatever capital in here is actually risk-free for our
purely profits.
Purely profit. So what we aim for our future investors is that when they were to invest their money, our first goal is to ensure that they have their own capital recovered. Then whatever is in here is going to be fully risk-free. There's nothing to worry about. And all the trades that we're going to get, you can see how small this zone are. So if this zone is very small, technically you won't ever exceed 50 USD in one trade. And when it goes up, you can see it can goes up to maybe 10, 20 or $30 max. Yeah, so we hope that this explains that this Fibonacci 5.0, some might use a head and shoulders. I mean, that's not wrong. However, when you are using a strategy, there needs to be a specific calculation to ensure that it goes your way. So this can be the. However, a good left shoulder is where it extends up to 161.8. And the next, while it's forming its head, it have to extend to 161.8. Once these two are being fulfilled, then you are taking this right shoulder. At about a good one will be the second retracement 88.6. You can enter about 50. That's what they recommend. However, if you were to enter here, look at the zone that you are risking. This is going to be huge, so we don't want to take that risk for our client. Although we can enter here, but as soon as the price go up, we might want to close whatever that's in profit, leave this and let it go run in profits for a swing trade.
That's a fantastic context for the strategy. Thank you very much for sharing. I think for anyone that's going to copy this strategy, it's really important that you look at the entry levels on the trade and try to also get a feel of how the Markings group incorporate Fibonacci into their positions, as well as recognizing these very unique harmonic patterns. Like you said, only happens maybe once or twice a week, or it's not very often that you can get these really clean entries and let the trade run as well by, like you said just now, moving your stop loss to cover to greater than break even. So you've covered the trade, you've covered all of the risk, and you're letting the trade run. That's the key, I think, for any trader that's looking to even step into trading, to always look at how you can minimize your losses as much as possible, especially when you're onto a winning trade like this. So thank you very much. And
No problem.
you both mentioned that you were FTMO verified as well. Is that right?
Yes, correct.
Fantastic. How did that whole challenge go for you guys, and what did you learn from it?
Actually, for our part is that we can safely say that when you have an FTMO account, it forces you to be disciplined on your trade. So we feel that if we can have this account, we are trading about 300 plus K account. So we feel that if, let's say, we are able to handle that account equity, why not? We share this, because when we hold a seminar that I think BlackBull Markets sponsored last year for Marking's group under Mr. Mahaban. So what happened is that this is exact same thing that we teach. So what we feel is that if we can teach this, why not we show that, we find a signal for them. If you don't believe us, why not we enter that trade for you? So if we can handle a prop firm account, why not we do this, out of goodwill, we share, because we feel that some things are meant to be shared, because some of the clients that join us, is come from a set background, some of them are still working. So having their money actually lost just like that, is actually, we feel sad for them. So we feel, why not, as you learn, we help you grow the account, because we are looking at the same chart. If I find the setup, you should find the setup, but for now you might not be able to see it. Why not we enter that trade for you? So as we enter this trade, you study our trade, then we can grow the same, because I think forex is a big market. Even if you get $1,000 or $2,000 profits, what's that compared to the rest of the world that's getting 20, 30,000 or million? So I think there's nothing as compared to what is there is. Yeah.
Fantastic. And you also touched on an interesting point about practice what you're preaching. That whole message is really great, and what puts you aside from the rest, because there are a lot of education providers out there online that just don't trade themselves. So for you to do that is a major point of difference, and fantastic to see. So
because ultimately on our side, is again, we wouldn't want to do something that we can't do ourselves. So hence the reason why before we actually tell our clients that we are verified, that we can teach, is that we ensure that we have a first FTMO account, and secondly, before you even decide to put in the deposit or you even want to trade, you can see our live portfolio, which is the social trading platform. And if let's say you are scared to even enter a trade, you can follow our trades. So this actually allows full transparency. In an event they are even doubtful, they can see our live portfolio, they can observe us for the first month, second month, or even if they put in the money, they don't like it, they can just withdraw the money after 1 month.
Because at the end of the day, if they were to put 1,000 USD, they're only risking 100 USD. I mean, if you were to set up a business, hiring one person can be 1,000 or 2,000 dollars, you know. But if you hire us in a way, you're just putting 100 USD. Once we hit that total drawdown, you can just close the whole thing. Next month, you decide whether you want to hire us again. But while we are in here doing things for you, as long as we did not lose your capital, technically you're hiring us for free. So I think when we look this in terms of business perspective, risking only 100 USD for us to play the trade around, I think that would be much better than you join a gym membership. You know, you are willing to pay for that. You're willing to pay for other membership. But if let's say you just tap on us, but I think moving forward, some of our plans is we like to discuss with BlackBull Markets. If let's say if we were to hold a seminar or what in Singapore, maybe with the funds that we get, or if we hit a certain target, can we actually do a live session for all our clients so that they can see us entering the trades live? And also I think maybe one day it can move towards that. But as of now, we're trying to do what we can. We do not want to say what we want, but rather what we have done so far consistently, and hopefully we can be part of the whole big program.
Fantastic. Well, thank you very much, guys, for sharing your story. I think it's been really enjoyable for me as well, and hopefully our listeners to learn more about your strategy, why you're consistently at the top, and also why our subscribers can choose or should choose your strategy, and also through the advantages of the copy trading platform to continue to learn how to mitigate their risks. But no, thank you very much for coming on to the podcast today. And
thank you very much, Mr. Anish.
We wish you all the best of luck, continued success, and again, I hope you stay number one and trade safe.
Thank you. Maybe we can add one more point.
Yes, of course.
Before anyone decide to follow our trades, actually the recommended strategy is they follow a multiplier strategy, subscription strategy, multiply subscription strategy, and for every $1,000, their volume multiplier just stick to 1. So they increase by 1. So if, for example, they deposit $1,000, their volume multiplier should be 1. However, if they decide to put in more money, for example 5,000 USD, their volume multiplier will be 5. If they put in 10,000, their volume multiplier will be 10. So the safest and recommended strategy that we advise our future clients is to ensure that you use a multiply subscription strategy, and every $1,000 increase your volume multiplier by 1.
This would be very important, I think, before we wrap this up, because if let's say you put 1,000, you increase the volume multiplier by 2, technically you actually increase your risk. Actually, our 10% drawdown become 20% on your side. So I think that's about it on our side. We hope that we have shared something with the rest. So we'd like to thank you, Mr. Anish, for putting aside the time to let us share this with the rest of the BlackBull community.
Thank you so much. And hopefully it helps our trader community and our clients, and we'll be posting it online on all our channels on social media, so make sure you check that out. Cheers.
Thank you so much, Mr. Anish.
Take care. Have a great one.
Thank you. Bye. You too. Bye.